Hey, good afternoon, everyone. It is Saturday, May 7th, 2022, 1:14 p.m. New York time. Hope everybody's doing well and you had a great week. And I'm going to do a video today, a little bit different. And this is trading using Forex sentiment, client sentiment, as basically a contrarian indicator into the direction that you want to trade in. That may sound really confusing, but it's actually very simple. And it's based on the premise that, and on the statistic that you've probably all heard, that about 70 to 90% of Forex traders are wrong and lose money and trade in the wrong direction. And this is a methodology that you can use really as a standalone, but of course you never trade it in a vacuum. Always make sure you use other indicators or other entry methods, which we'll talk about here. But this is a way to potentially look at the market and look at potential entries based on going against what everybody else is doing. So I'm going to get into it, and it'll make perfect sense once we get going. So what is retail sentiment? Well, first of all, again, as I mentioned, about 70 to 90% of Forex traders, depending what statistic you look at, and I don't know if anybody can really prove this, but let's go on that assumption that that's right, lose money. And part of the problem is, which you'll see, and that's kind of the basis for this whole thing, is that Forex traders, retail traders, like to try to pick tops and bottoms. So there seems to be like there's almost a human nature element that they're trying to fight the trend all the time. Instead of, using the old adage that the trend is your friend, they're trying to fight the trend, pick tops and bottoms. So every time the price makes a new high or a new low on their chart, they're looking for some kind of reversal signal, thinking that they're going to, hit that, that change, that reversal direction in the market, only to have the trend continue on and they keep losing money. And they're either holding on to losing positions out of stubbornness or whatever, or they close that losing position, but then they open another one when they think the next time there's a new high or low that the price is going to turn, and it doesn't. And so that's kind of the whole theory. And so large traders, smart money, basically can use that to their advantage and trade against them and use the trend as their friend, which is what you should be doing if there is a trend. So let's talk about what market sentiment is. Now, first of all, there are many brokers, including my broker, and a lot of brokers that offer the sentiment readings for their clients. Okay, but the issue is that, as you probably know, the Forex market is very decentralized. So if a particular broker has this information either as an indicator for your chart, or whether it's something on their website, on their broker website, where you can see something similar to what you see on the screen now, that only represents their book of business. Now, in reality, it's probably going to be pretty similar across any broker. So if you put three brokers' sentiment numbers next to each other, they're probably all going to be within a few percent of each other, because you have to assume that across the retail market, it's pretty much the same story everywhere. But I'm going to show you a couple of websites where you can kind of get some aggregate data that kind of opens that up a little bit. It's not so restricted to just one particular book of business. But in the end, that doesn't really matter too much. It's more about how you interpret the data. So what is market sentiment? So basically, let's talk about this website first. So I'm on myfxbook.com. Now, myfxbook.com, if you've never been on here, is a very comprehensive site. There's lots of stuff on here. And I definitely encourage you to check it out. I'm not going to get into everything on here today. I'm not in any way promoting this site. I have nothing to do with it. But it is a really cool site. And you can register and sign up for a free account, which gives you access to some other things that you may not have access to just going in. But for the most part, you don't even need to register an account here. And so what people will do is they will go on here and they will connect their actual trading account, whether it's a demo account or a live account. They will connect it to their MyFXBook account, and then there's a verification process so they can make sure you're a legit person and it's a legit account. And then they will actually connect your account, your broker account, to their website, and then you can actually go in and display your trading results. There's graphs. There's all your trading history, how many pips. It's pretty comprehensive. So I'm not going to show you that now. But because they have all that information, and because anybody can register on here, that actually gives you the sentiment data across arguably a much larger piece of the market other than just one particular broker, because this is not a broker website. This is just a general website. And so it takes away some of that problem about, the Forex market being decentralized. So what they do, and this is the same no matter what site you find this on, is they look at the percentage on any given pair, percentages of longs versus shorts. So if we take the pound versus the US dollar, and I hold my mouse over this, you will see that currently for all of the traders they have registered on their site, 85% of them are currently holding long positions and 15% are holding shorts. You can see it's quite a few positions too. There's 5,861 open shorts and there's 37,575 open longs. So it's quite a few contracts, and you can see the lots, the number of lots that are being held. The only thing I really care about is just those percentage numbers, 85 and 15. Okay? And so the theory behind the sentiment is that if the sentiment is 70%, now you might hear different percentages, but I use 70%. If the split between the longs and the short is 70% or higher in either direction, then theoretically you should be looking for trades in the other direction, because that means the retail crowd in this case is very heavily net long, and so theoretically you should be looking for short positions as a contrarian trader. Okay? And of course, if it was the other way around, if it was 85% short and 15% long, then you'd be looking for long positions. Okay? Now you're going to find some where it's kind of split, like let's say Euro Kiwi is kind of split, so it's less than 70%, in this case 45-55. So if it's under 70%, or certainly under 65%, but I use 70% for my purpose. If it's under 70%, then it's kind of a mixed bag. And what I do in that case is either I don't trade that pair, or if I do trade that pair, if there's a trend on that pair, I will continue to trade it in the direction of the overall trend. Okay, as long as that trend lines up with the split here. So in this case, on the Euro Kiwi, it's 55-45 in favor of the long. So if there was an uptrend on the Euro Kiwi on the chart, I'd continue to look for long positions, until which time this split became extreme. Either the short or the long hit that 70% number, because it will change over time. Okay, so when these ones are under 70%, you can either choose to not trade them at all, or if there is a trend, just trade it in the direction of that trend. Okay, but I'm not going to talk any more about that. We're going to just talk about these ones that have extreme positions. And I'm going to just show you an example, and I'm also going to show you an example of where you can't just trade this blindly, as I said, that you do still have to use some other, analysis before you jump into a trade. Okay, so if you go to myfxbook.com, to find this, just go in here to the search and just type in community. And in fact, now they have this nice little bar across here, so you just click community and you go down to sentiment. And that's what this page is right here. Okay, this is their sentiment page. So right across the top, community, down to sentiment, this is what you'll find. Now, a couple of things, just how to navigate this. If you click this, when you first go in here, you're going to see every single solitary Forex pair available to trade listed. And, most of them, there's going to be a lot you don't trade. So if you only want to just narrow it down just to the symbols that you trade, all you do is you go here, there's three little dots right here. It'll open up this window, and you just uncheck all the ones that you don't want to see. Okay, so I only checked off the ones that I want to look at, and that's it. And, you can have them all up here, but there's some really funky pairs here that nobody trades. So, but whatever. Just go and select the ones you want to view, and then just click the three dots again, and it will only show you the ones that are that you picked. Okay, and as long as you don't clear the cookies in your internet browser, it should hold this even if you close the site and come back to it. And you can see I'm not even logged in. I do have an account here, but I'm not even logged in. So you can access this even without having an account on here. You can access this information, so it's completely open. Okay, and if I did log in, it wouldn't actually give me anything more. Okay, so these are the pairs that I want to look at. And then they have some other pretty interesting stats down here. And this kind of actually goes against what I just said a minute ago about statistics. But you can see here they have this real account. So I'm assuming what this means that 64% of the accounts on their website are actually real live money accounts, because they will verify whether it's a demo or a live account. So 64% I'm assuming are live accounts. What that means, 63% are profitable and 36% are not profitable. So that's actually kind of goes against the trend, and which is why I use a secondary site and maybe even a third site to verify this information up here. Okay, and as you'll see when I show you the other two sites really briefly, most of the time they are within a few percentage points of each other when you look at these ratios. But occasionally, you know, there's one that's kind of an outlier, and I'll look at like 2 or 3 different sites, and I'll just take, you know, the one that seems to be the most agreed upon. Okay. So, and the other last thing I want to tell you about this is this updates on a daily basis, but I don't think it refreshes automatically. So if you leave this window open on your browser, then you just want to go in and just refresh the page every day. Okay, just so you make sure you have the latest. Now, in reality, these do not change very much day to day at all, but still, you know, you just want to refresh the page, you know, so that you can make sure you're looking at the latest numbers. Okay, but like I said, they don't change very much day to day. So there's a nice, there is a nice other feature on here where you can actually dig down into the symbol a little bit more. But I'm going to show you another website that I think does the same thing but gives you a better view. So I'm not going to show you that on this page. So let's just for now, okay, so let me just show you the other page. So I found this page completely by accident. I just actually went in and Googled Forex client sentiment, and lo and behold, there's a website called forexclientsentiment.com, and here it is. And this is actually pretty cool. Now, this does not appear to be tied to a broker at all. When you go to their homepage, it says, I don't know where it says it on here. Yeah, so there it says here that our client, and this is what I was talking about before, that the Forex market is so decentralized. And it says right here, in this paragraph, right, it says, broker published data only shows the sentiment from those who trade with that particular broker and may not be representative enough. Our client sentiment solves this problem by not relying on a source. Instead, it paints a more representative picture of the retail market using advanced algorithms and methods like AI. Okay, so I don't exactly know what their algorithms are and how they do this, but it's similar to what MyFX book shows. It's not tied to one particular broker's own traders. Okay, they are somehow using AI. They must be going out and they have some AI that goes out and probably pulls this data from multiple broker sites and averages it out. I'm not really sure. They don't really say. But I'm assuming they're getting it from multiple sources, okay, which is good. Because like I said, you know, if you're looking at one broker, you're looking at one broker. So if you can get it across a wider swath of the market, then the numbers are going to be more reliable. So they have a little bit of information on here about how they do that, but it doesn't really get into a lot of specifics. But the nice thing about this site, it's completely free, it's completely open, there's no registration, and it's a very simple site to use. Really, you only have just the one page. You go in there, you click on client sentiment, and here you go. And how they list this here is all of the most popular pairs traded right here. And as you scroll down, here are some of the kind of secondary level. And this pretty much encapsulates every kind of major and minor pair that you're going to trade. It doesn't really have any exotic pairs on here, but this probably captures 90% of the pairs that anyone's going to trade. And if you keep scrolling down, there's even a few indices here and a couple of commodities, which I don't trade these, so I'm only looking at the Forex stuff. You know, this is all here. And so they give you this little sidebar over here, which kind of gives you a quick snapshot of the pairs that they think you should be looking at right now. So, of course, this will change over time. And, you know, this is just kind of give you an idea. So, for instance, the pound dollar, they have a very strong sell. And that's what we looked at, where the retail traders are heavily net long. So they're telling you should be selling this pair. And depending on how many arrows is how strong the conviction is. Dollar CAD, they're saying you should be buying, but it's kind of a weak buy. And this has to do with basically what the price is doing on the chart right now. Does it look like it's, heading into a more of a range trade? I'm not exactly sure how they figure these arrows, but I think it has to do with the current price action, but I'm not really sure. It doesn't really talk about that. So you can take these arrows for what they're worth, but it is a nice little snapshot of maybe these are the ones you want to concentrate on potentially finding opportunities on. Okay? But you don't have to use that. And you can just see they have all these different pairs. Now, I want to show you a nice how you can dig into this a little deeper, that I think this displays it better than what's on MyFX book in terms of how they display this. But if you go to any of the pairs, let's go to the pound dollar and you click on the instrument, it's going to open this separate window, and this kind of overlays the daily price chart on top of the sentiment, which is pretty cool. So you can see this is a daily chart. This goes back to February 7th, so it's about 3 months of data. And what it shows is, and this is exactly the whole point of this, right? As price is going down, right, the sentiment, the bullish sentiment from the retail traders is going up. That's this blue area, and the pink is the kind of the bears. So as price is going down, the retail traders are increasing their longs, which is exactly opposite of what you should be doing, right? You want to trade with the trend. So this is the contrarian idea behind this, okay? And again, this updates on a daily basis, so you want to make sure that you refresh the page. Again, I'm not sure if they auto-refresh this, so if you leave it open, just refresh your page every day and make sure you have the latest numbers, okay? And so this is kind of the whole ball of wax right here. This is just a perfect example of what I'm talking about, where you have, again, retail sentiment becoming more bullish as the price is selling off, and all these people are losing money every time they get into a long position because the market continues to sell off. Okay? So based on that alone, you say, okay, then I should be looking for short setups on pullbacks. Obviously, you don't want to just jump in blindly. You want to still make sure that you get into a trade at a good point on the chart when there's a pullback. Same thing that you would normally do to, kind of join a trend in progress. Okay? So that's basically how you read this. So I'll just go back to the yellow page, and you can click on any of these and see it. Okay? And so this one kind of shows you the same thing again with the percentages. The Aussie dollar, 67.33, they still show this as a bearish. I know I talked about 70% as being the cutoff, but like I said, 65 is okay. So, you have to kind of make that decision. But again, I'm not sure exactly how they calculate this bullish or bearish or mixed suggestion here. See where it says either bullish, bearish, or mixed. Because here on the dollar CAD, it's at 42.58, which is, kind of even, but yet they have a weak buy on it. Okay, now it's pretty weak, but still, this is one of those things where, okay, as I mentioned before, if it's under 70%, if there is, say, a bullish trend going on, I would probably buy in the direction of that trend, which there is a bullish trend right now on the dollar CAD. So that kind of gets back to what I was saying. If it is under 70%, if there is a trend going on, I would continue to just buy in the direction, in this case buy, because it is suggesting that there is an uptrend in progress. And if this was, pointing down and there was a downtrend on the chart, I'd continue to look for sell positions. But in this case, they're buys, all right? So you can either choose to ignore these because of the split, or you can just trade in the direction of the trend. But all these other ones that have these big divergences between the bulls and the bears and the price, these are the ones you want to trade against what the retail crowd is doing, which in this case, on the pound dollar, is to trade it to the downside. Okay? So let's go back to the pound dollar chart really quick. And let's see. Okay, so here's the first thing I would do. Now, the 1 hour chart, you can see clearly we're in a downtrend. We continue to want to look for shorts here. But again, when I was saying at the beginning that you don't necessarily want to just trade this blindly. And why is that? Because at some point, this price is going to run into a major area of support or resistance, in this case support, or a demand area if you're a supply and demand trader. And at some point, the price is going to run right into that. And if you're just trading it and just looking at this one time frame, at some point you're going to get in at the wrong place and the market will eventually reverse, okay? So what I like to do is go out to the daily or the weekly chart. So here's the weekly chart, and I'm looking at this and I'm saying there's nothing really to stop this to keep going down, at least for a while. Now there is a little bit of a support level right here at this low where price kind of pulled back a little bit, but I don't really consider this a major area. I think it will probably at least come down to here, or maybe even further. So I'll continue to watch it, but I'm still basically looking to short this thing for at least a bit longer. And you know, from where it is now, even down to this next low is another 270 pips, and then down to here is a lot more. Okay, but we'll see what happens. But it is at, you know, a little bit of a support area here, so we'll see what happens. But so I like to go down and just take a look at those at that higher time frame, and I like the weekly chart just to make sure that I'm not, even though I'm following this thing down, that I'm not buying or selling into a major area. And you know, you really should do that no matter what methodology you're using. Always have a picture of what the longer term time frame is doing, at least the daily, preferably in my case the weekly chart. Okay, and just make sure you're not jumping into a trend so late that you're running right into a brick wall, you know, before the market's going to potentially reverse. Okay, so that's really the nut of it, guys. So you just go in here and you look at your, you know, you look at your meter, no matter what website you want to use. Concentrate on the ones that have a real high divergence. Okay. And then, you know, between the bulls and the bears, and go, and in most cases you're going to find when you go to the chart that the trend is actually moving in the opposite way that the bulk of the traders are moving, and that is your signal that, hey, I should be, you know, trading, you know, in the opposite direction from where the retail crowd sentiment is. In this case, with the pound dollar to the downside. Okay? So, two more quick things. So I want to show you one where you could possibly say it throws a monkey wrench in this. So let's look at the pound kiwi. Pound kiwi is showing 76%, okay, to 24 high net longs, and they're showing a strong sell based on that, right? 3 arrows down showing you should be selling this pair. 76% positive, you know, long retail sentiment. But if I go and look at the pound kiwi chart right now on the hourly chart, okay, you know, price is kind of moving sideways right now. You know, it's like, okay. But if I go out to the daily chart, then clearly, you know, we've got, and that's how they're basing this, that the daily chart is clearly in a downtrend, and, you know, potentially we should be looking for short positions in here, okay? So that's how they base these. I think that's how they're basing these arrows is off the price action on the daily chart. And on the daily chart, we are still down, and that, you know, we have this big move down, corrected move back up. So, you know, hey, let's potentially look for short positions here on this pair. Okay, so I don't trade the pound kiwi very much. In fact, I had to open this chart this morning to look at it. But you know, that's a good. You know, you could draw a trend line on here, and maybe if you take out this swing low right here, you get a close down below this candle. This is the 4-hour chart. Then maybe you do reestablish a short position on this pair, okay? Because I can tell you fundamentally, this down move, this was the pound, but this up move was not based on pound strength. It was based on the New Zealand dollar weakening. The pound overall is still pretty bearish. So that's why I do think from a fundamental standpoint that this pair will continue down. So anyway, so that's one where it may not completely agree with the chart, but that's why you got to look at the higher time frame. Okay? So what else did I want to show you? Okay, so I want to show you one where, when I was mentioning a minute ago that you can't just jump into this, you need to be aware of the higher time frame. So what I want to look at is the Euro Aussie. So if I look on my FX book at Euro Aussie, it's 74% long, 26% short. So you say, okay, I should be looking for shorts. Retail traders are heavily net long. On here, what is it on here? It's 58.42. It's more of a split deal here, which is actually pretty interesting, as you'll see in a minute, that this one is showing it as mixed. So you're like, okay, that gives me a little bit of pause that there's such a big divergence between, because like, as I said at the beginning, Normally these are going to be pretty close between this website and this one or any other one you look at. But there's a huge difference here, right? You're going from 74.26 to 58.42, almost splitting it right down the middle. So on my FX book, it's showing that this is a net long. This is heavily net long. You should be looking for short positions. Here it's like, it's 50-50, right? So which is right? So that one is one where I would definitely go and investigate the longer term time frame. So if we go to Euro Aussie, and so here's let's go to the weekly chart, and I already have this drawn out. Okay, so if you use supply and demand traders, this should hopefully be right up your alley. So you can see where prices come down to. See this wick right here, and I drew in this horizontal line. And if I look all the way back here, and this goes back to probably over 5 years ago, probably early 2017, you can see right here. Now you don't see gaps in the Forex market very much, just the nature of, because the 24-hour nature of the Forex market. But you can see right here, this is about as close to a gap as you can come, where this market really took off to the upside here, that went on for a few years. And right here at this point is, on this weekly chart, there's almost a gap right here. And you can see price came down and nailed it. This was, of course, about 4 or 5 weeks ago. It came down here and nailed this right on this spot. Okay? And you can see it's tried to bounce off here. Now look, guys, I am not telling you to go out and buy the Euro Aussie. I'm not telling you to do anything. I do not recommend trades. You do your own analysis. But I'm just showing you this so they understand that even though the client sentiment shows heavily net long on my FX book, you don't necessarily just want to jump into a short position because you ran into a major area of support or demand here on the weekly chart. And that should give you a little bit of pause that this could, and I stress could, underline it, boldface type, could mean that this will start going up again. And the fact that this website shows it as split also gives me a little bit of pause here, okay? And the fact there's such a big difference between these two websites. The other website that you can, I did have this third one here. This is IG from dailyfx.com. They're pulling information from IG, which is a broker. But the only problem with this is they only show like the most heavily traded pair. So Euro Aussie's not even listed here. But if you're trading just the majors, this is also a kind of a third one that you can use if you want to verify all three. IG is another one. If you go to dailyfx.com and just type in sentiment, you'll come to this page. But like I said, for FX pairs, they really only give you the majors. They don't go into all these secondary pairs. So if you only trade the majors, then this is great. Okay. So anyways, back to the Euro Aussie. So here you go. So now if we go back to the chart, and I'm looking at this and saying, well, I'm not sure whether I want to take shorts here. Okay, I may actually start to look for long positions. Okay, and you can see the recent price action on the hourly chart. I have this big strong move up, this kind of choppy corrective move down, and now more impulsive move up. So I'm leaning towards wanting to look for long positions here, but I'll be patient because obviously if it is going to turn on the weekly chart and go back up, you're going to have plenty of time to get into this. Okay, so don't be rushed into it just because of what's happening on the hourly chart. So, okay, so that's something really just to keep in mind. Now, if we go back here and we look at this in a little bit more detail. So here was the again back on the daily chart here. Again, price was going down, retail sentiment was going up. Okay, prices continue to go down. Now it looks like maybe it's bottomed a little bit. And you can see what's happening here is that the retail sentiment just continued to go down. Okay, even though the price, the retail sentiment here was going up. But see now what's happened here recently. The price has kind of leveled off. Okay, it actually kind of took out this new high right here. Kind of leveled off, and now it's kind of ranging a little bit. But look what's happening to the retail sentiment. The bearish positions are actually increasing as this price is bottomed out. Because again, the retail traders tend to be late to the party, right? They're just now getting into this, to the short side, when really now perhaps they should finally start looking for long positions. So even though the sentiment is 53% long, I would expect that you're going to see the short sentiment start to increase and the long sentiment drop even as the price begins to turn back up potentially. So that's what I'm saying. They look at it as, as being late to the party. So this is a really interesting one to watch, is the Euro Aussie. And you can see on this website, they talk about 35-65 split. Okay, sentiments below 35 or above 65 combined with the price moving in the opposite direction could imply a contrarian signal. Okay, now that we don't have that in this case on this pair, but that's a good explanation. So I mentioned 70%. They look at it as 65, which I mentioned at the beginning is fine too. So 65 or 70% in one direction or the other, in addition to having price moving in the opposite direction from that higher number, is what you're looking for. Okay, we don't have that on this pair. But I wanted to use this one as an example first to show you that you have to look at the longer time frame to make sure you're not trading into a major area of support or resistance, and also the fact that at some point these do turn, and this one could be one where the traders, the retail traders, will continue to add to their short positions thinking this downtrend is going to continue, when right at the same time price starts to turn and go back up. And if that's the case, what will happen here is price will start to go up and you'll see it cross and diverge from the bearish, from the retail people going short. This line might start to bend down, price will go up, and they'll cross over, kind of like what happened right here, and back to the upside, and that's a clear indication you should be looking for long positions. So I say you can be a little bit patient because this could keep going down. I'm not saying that it will turn, but this clearly bounced, and this is definitely a major area. But I mean, it could keep going down into this area, down into these extreme lows down here, which is still a long way off. So we'll have to keep an eye on it. But this little gap right here, this is definitely not really a gap, but close to being a gap, is a very bullish signal. And price went exactly to that spot and bounced with this big wick on the weekly chart. Okay, so I'm just using this as an example, guys. Is just don't trade it blindly. Go out to the higher time frame and just take a quick, pulse on where the market is in the bigger picture before you continue on with that contrarian view. Okay, but if it's kind of like the pound dollar where it looks pretty good, then yeah, go for it. And if you see a 65% or higher ratio between the longs and the short, and the price is moving opposite of that, then that's definitely your signal. Okay, so in this case for the pound dollar, 80-20, okay, price is moving down, 80% of the retail traders are long, that's your setup, right? You got 80% to the buy side, and meanwhile a strong downtrending market, then you should continue to look for short positions against the retail crowd, which is what this thing is showing you right now, okay? Whereas something like dollar yen is just the opposite, right? 70%, almost 70% are short. Okay, we have a strong bullish trend. So, assuming that you've got, headroom above this, then you should continue to look for buy trades on the dollar yen, okay, against the retail crowd who is heavily net short on this pair. Okay, and again, if it's mixed, if it's kind of a split, it's in that kind of, under 60%, then either continue to trade in the direction of the trend that's showing, or go out, just be sure, like the Euro Aussie, that you're going out and just making sure that it's not potentially doing that because it's running into an area on the chart where price could, start to reverse from. So you can, like I said, you can either just ignore those kind of 50-50 pairs or trade in the direction of the trend that's currently showing. Because a lot of times if it's under that 65-60%, that usually means the trend will continue. Again, assuming you haven't hit, a major top or bottom in the market. That's usually what that means, okay? But when you hit those extremes and the price is showing you the opposite direction, that's your signal to continue to trade contrarian to the retail traders, okay? So that's really it, guys. it's pretty simple. I mean, no matter what website you want to use, whether it's MyFXBook or IG Client or your own broker, if they give you this type of data, or client sentiment, but I would recommend using something like this client sentiment or MyFXBook, because again, it aggregates from multiple sources and not just one broker. And you can just very quickly scan down, see which ones have the biggest divergence between the longs and the shorts versus where the price is, and that's it. And then just use the higher time frame to kind of level set you about where the price is in the bigger picture, and that's all you really need to do. And then after that, you just use regular trend following skills to, get back into the trend. So if you're not in it, like on the pound versus the dollar, I have my little channel thing on here. You continue to, look for entries, when the price bounces back towards the channel, or whatever entry you use to get into a trend. All that stays the same. Your money manager, everything else is the same. This is just how you can filter down what pairs you want to look at, and filter out the ones that are, don't meet that criteria, and just kind of give you the ones to concentrate on. But the methodology is based on, retail sentiment. That's your methodology. And then after that, like I said, you use your regular entry and exit techniques, whatever that is, to get into and to get out of trades. Okay. Once you have done this analysis, okay, then again, the entry and the exit methods are the same, whatever you normally do. Okay. But this is how you're just going to decide which pairs you want to look at and which direction you want to trade in based on going against the retail crowd. Okay. So I hope that makes sense. All right, guys. So again, if you find any value in this, go ahead and, you can just go ahead and bookmark these sites. Just go to forexclientsentiment.com, check it out yourself. Go to myfxbook.com, the sentiment section. If your own broker offers this kind of data, you should be able to find it pretty easy on their website. If they don't, that's okay. You don't really need it. But it could be another source of information for you. And just, take a look across at least two different sites and make sure, they should be pretty close to each other. If they're not, then I would take a deeper look at what's going on, such as what we did with the Euro Aussie. All right. So I hope that's of interest, guys. It's a really unique way of looking at the market. And, when you think about it, if 70 to 90% of the retail market is wrong, then theoretically, if in a perfect world, if you did this 70 to 90% of the time, you would be right, because you're going against the people that are normally wrong. Of course, it doesn't work that way exactly. Your win rate won't be that high. But if you can get even close to that and have good money management and, cut your losers short, this is actually very reliable. And the last thing I'll tell you is probably about 3 or 4 years ago, I did a video on this, not as in depth. But what I did is I went to this page, to MyFXBook, and I opened a demo account, and I just I picked like 3 pairs that had a big divergence like this, and I just entered trades. I didn't wait for any pullback or any good entry point. I just blindly entered them, which I would never do on a live account. And I said, just as an experiment, I let those trades run. I think I took I want to say 3 or 4 trades. And I just let them run, and I did a couple of updates, and surprisingly, I made money. It was a demo account, but they were profitable trades, even not entering at ideal spots, which just proved to me that that's actually worked pretty well. I think I took 5 trades, and 3 of them were at the last update I had done were in profit, and the other 2, one I had gotten stopped out on, and the other one was in a small loss. But overall, it was positive. If that was real money, I would have been profitable on those trades just based on that. And I didn't even enter at a good spot. I entered it really just right in the middle of price movement, which is not a good place to enter. So I probably did that maybe 3 or 4 years ago. The videos are probably still on my channel somewhere, but this is much more in depth. So I'm going to use this, but follow the rules for entry too. But I just wanted to mention that I did look at this in the past, and it does work. But again, you can't use it alone. You do still have to use it in conjunction with other analysis, and don't just do it blindly. Okay. But it is pretty interesting. And if you go and just do your diligence and just take some of these, look at the ones that have extreme, and then go to the price chart and look. in most cases you're going to find that it works really well, that the retail traders are heavily net long, you go to the price chart and there's going to be a downtrend. Or the retail traders are heavily net short and you go to look at the price chart and the price is up, the trend is up. You know, it's just so predictable. So in most cases, and you got to look at the right time frame. If you're looking on a really 1 minute, 5 minute time frame, who knows what it's going to show. I'm talking like looking at the 30 minute, 1 hour, 4 hour chart, so you can get a wide enough view of the trend to make that judgment. So, all right. So, anyways, guys, I'm going to leave it there. I'm already at 40 minutes here. So I hope you guys have a fantastic rest of your weekend. Please hit that like button down below. Helps out with the YouTube algorithms. And if you're just finding the channel, hit the subscribe button down here in the lower right-hand corner. You should see that. And so you get notified. Ring the bell notification. So when I make a new video, you'll get notified, which is only about once a week. And any comments or questions, obviously drop them down in the comments section. And hope you enjoyed it, and have a great rest of your weekend, and we'll catch you in the next video. All right, guys, take care.